Hey, what's up everyone? Welcome back to another episode of Weekly Roundup. My name is Frankie.
And I'm Ryan.
And special thanks to The Coffee Break, which always brings us all the important news to our emails on Mondays to Fridays. If you're interested to be updated with the latest news, don't forget to sign up to The Coffee Break newsletter by clicking in the link below.
Thank you, Frankie. The only way to stay informed is through The Coffee Break. Okay, let's start with the news of the week. So we've got quite a few interesting news lined up for us, mainly from business, a couple of politics, and a couple of some fun nuggets to wrap up the show. Surprising news last week was that CARSOME, which operates one of the
our unicorn,
Malaysia's most valuable tech startup, right, is announcing job cuts in mainly their Indonesia and Thailand markets, right? Because it wants to hit profitability before its potential listing, which has been delayed. Was it supposed to happen this year?
I think it was supposed to happen.
Or was it last year? Right, then they are delaying it.
But it got delayed because they were saying that the market condition is no good. They cannot fetch the valuation that they want. So therefore, hey, let's take a step back and wait for a better timing to do the IPO. Yeah. That was the reason that time lah. But from that time until now, it seems like they are not doing very well until they have to cut people.
Yeah, I mean times are not great lah. I mean and to reach the profitability, because I think in the end of the day, if you're not profitable and you do listing, what will happen on your maiden day?
You are not even qualified to go listing if you're not profitable.
Correct.
Right? You must have a minimum requirement of a couple of years of track record, then only you can go for IPO. But the thing that makes me feel a little bit funny is that usually how people reach profitability is to increase revenue.
Expand the business, right?
To grow big.
Bring more people in, right?
And the reason you go IPO is to have that extra funding, that extra boost for you to go even further.
Correct.
But this deal, it seems to me that, okay, I want to go IPO, but in order to do that, I need to show profitability. And to show profitability, what do? Cut costs, cut headcount so that I can show some profit. So, not sure whether that is the story that the market is ready or not.
Yeah, also may not bode well for the listing actually. Now from that point of view, okay, they want to reach profitability, but what is really driving the business? Should it be top end or should it be at the bottom line?
What do you think about their business?
Because they have competitors locally as well, right? A bit challenging in the sense, a lot of times people would just go to CARSOME, get a valuation, and then they would deal elsewhere. Because,
that's one of the problems that they face.
Yeah, right. So because eventually it becomes a place where you get a value of that product, of a car, not so much of the service. The service, maybe they do. I have not tried CARSOME personally. I've heard good things about it, but as a seller, you want to maximize your value. And if they want to sustain as a business, they have to give some discount, right? In that way. So maybe that the business model.
Yes, the business model I think is the biggest problem. Because I think they're in a business that defies gravity,
Supposedly lah.
Yeah, because you are buying second-hand car and these are depreciating assets. If you don't sell it off within, let's say, 3 months, the asset is going to devalue further. So let's say if you buy a second-hand MIER for, let's say, 30,000, 3 months later, it will go down to, let's say, 28,000. You have lost 2,000 along the way. And you're not just talking about one car. If you have a fleet of, let's say, 1,000 cars.
This is just an accounting treatment. And there's loss in value, right? So again, it comes back to your valuation of the company. How do you look at the assets? If the assets is depreciating and it's a non-cash flow item, it's not going to look good.
But anyway, I think that investors are pressuring them to do this IPO as well, so that they are able to realize their investment.
Yeah. And talk about cutting jobs. CARSOME isn't the only one. So you've also got Maxis, right? Despite reporting a profitable quarter that ended in September, right? They are also cutting about 10% of their workforce. So based on about 4,000 workers, right? As of last year, they're cutting for about 400 workers.
I suppose that's because the telco industry itself is getting more and more competitive.
There's also the consolidation from the DG
DG Celcom deal.
Merger,
there's a consolidation.
Yeah.
From there, I think they also will cut off some of the cream. And then I think because previous years, all these telcos, they were in a price war as well.
Yep.
So that has already affected their profitability. And I think because all these companies, they typically hire a lot of people.
A lot of sales, a lot of sales just to push it out, right?
Correct.
But now that you can sort of cut it off, and if more and more people are
streamlining their accounts a little bit.
People are going for subscribing through digital channels and whatnot. Yeah, this could be a reasonable move by them. Apart from Maxis, we could also potentially see BerjayaFood cutting its staff for a cost optimization exercise, right? So in its Q1 for 2024 that ended 30th September, BerjayaFood saw a net profit decline from 34 million to 19 million, right? That's a huge amount year on year lah, right? A huge amount as well. While revenue dropped marginally, but profit declined because I think you may have noticed that Starbucks have been doing quite a lot of deals just to drive that consumption up, right? And it's a very competitive space in the market.
Correct. It is so much difficult to operate a Starbucks store today compared to, let's say, 5-7 years ago. We used to have this argument whereby, Starbucks is a brand, right? You can open 2 outlets on the same row of shops and both outlets will still make money. So those were the days. But I think today is a little bit more challenging right now because you have other chains like Zeus Coffee, you have GG Coffee, you have so many more choices. And all these brands, they're coming out with more affordable price range. So that has definitely put a challenge on Starbucks coffees today. I think today as a stock investor, BerjayaFood is still able to give you that kind of dividend yield. But my question would be, will it be able to sustain that in the long term given that all their brands is facing stiff competition? Last time it's just Kenny Rogers got problem. Today, I think Starbucks is slowly feeling that as well.
Slowly feeling that. And of course from the boycotts lah. Because
the boycott
there's a boycott wave on Starbucks, right? So I was in Starbucks today. Usually that branch, I would say, the last time before all this Israel-Palestine war and before the conflicts, I would say there were probably about 4 or 5 staff in the morning, like, because busy, right? People going to work, get a coffee, so 4 to 5 staff in the branch. Today, only 2. And there was a queue. So because there's only 2 people, right? Someone handling the cashier, someone making the coffee, and they switch. So they are doing some sort of cost optimization, but not announced lah. But they are going to focus that in the remaining quarters for the year. Let's see how this pans out. All this movement by this company is also quite aligned with the negative consumer sentiment and business confidence that was reported by the Malaysian Institute of Economic Research. So MIER has reported that Malaysian consumers and businesses have grown more pessimistic in the 3rd quarter of the year, right? Mainly because of pandemic. Rising wage costs, slow income growth, right? And it's quite aligned with what the businesses are doing. And do you feel the same?
Since the beginning of the year, we have been saying that, we don't think, at least on the stock market perspective, stock market is not going to be good in the second half of the year because you have all this high interest rate environment, businesses are feeling the pinch, people are starting to feel that borrowing money is more expensive, so instead of borrowing money to spend, they are starting to tighten their belts. So those are some of the things that we saw at the beginning of the year. And I think right now it's just that things are starting to pan out as per natural progression of the economy going towards a soft landing lah. And this is actually in a way engineered by the central bankers. They want a slowdown in the economy so that they can bring inflation down. So it looks like it is working in that sense. So today we often say that bad is beautiful for the stock market. When the economy announce a bad economy data, is actually what the central banker wants to see, and that has been the case. So I feel this MIER research report is something that the central bankers are looking forward to. Going forward, chances are they may not want to increase the interest rate anymore and just keep it at this level lah. So that is a blessing in disguise in that sense. But going forward, then you have another tricky question, is how do you restart the economy engine again so that people can start to have more economic activities, people will start spending and break away from this bad cycle. That will be the next challenge that we are going to face.
Very normal would be fiscal spending.
So the government has to start first lah.
Government to start first creating more jobs, or the central bank would have to lower the rates again lah. People are willing to borrow more, businesses are willing to expand more, right? It's also a very interesting point in time where, like, if you as a company can then go through these tough times, you will survive. Right? Like, this is
Survival
really like
of the fittest.
Survival of the fittest. If you can survive through these dark days, this slowdown in the economy in the next couple of quarters, potentially, then you will survive the long run. Not an issue, right? And it's also like, this is where opportunities will come in as an investor. So the business conditions index declined in the quarter, right? Falling 79.7 points, which is the lowest since the initial outbreak of the COVID-19. But it's not all gloomy for business. So some businesses do make money, right? So like the big deal last week was Sime Darby Ramsey has exited the healthcare business. So they sold their entire stake in Ramsey Sime Darby Healthcare to Columbia Asia for 5.7 billion cash. Woo! Good payday.
Good payday,
right?
Yeah. So that would help Sime Darby to actually unlock the value of the assets, and then potentially maybe they can give out a special dividend and whatnot. Hopefully.
Yeah. These funds can be then used to strengthen their core business, right? In like of industrial and motors, and then probably also reduce borrowings from the UMW Holdings acquisition that they did early this year. Was it mid this year or late this year?
This year. Speaking of the 5.7 billion ringgit, do you know how many hospitals exactly are they selling? Is it like one hospital, 5.7 billion, or is it like...
RSDH operates 4 hospitals in Malaysia and 3 in Indonesia, and they're selling all those stakes to Colombia Asia.
So by selling these 7 hospitals to Colombia Asia, I think Sime Darby is able to make a gain of 2 billion ringgit. So which means to say that the cost for them in the past was only about 3.7 billion to build those 7 hospitals. And so today, if we are talking about a special dividend, after taking into account putting some money into auto, into plantation and whatnot, potentially you can talking about billions of ringgit worth of special dividend going forward, if they decide to.
Good day for shareholders lah, actually.
If they declare it to you lah.
Yeah.
If they don't, then that's a different story. Okay, so enough on the business side of things. I think you also have some updates on the Malaysian political scene as well.
Last couple of weeks has been big, right? Like all these Bersatu member of parliaments were pledging their support for
a lot of
Prime
different
Minister
species of katak emerging.
Yes.
Different species.
What happened was the former health minister, Khairi Jamaluddin, revealed that this anti-hopping law, right, it was actually discarded by Bersatu.
I still remember that time. Yeah.
So the law was...
They were trying to make the law as tight as possible, but there were some debates happen over there.
There were some loopholes, right?
Yeah.
There were some loopholes. And the clause was that if an MP defies a party stance or fails to comply with the party whip, right, then they would have to vacate their seat.
Correct.
That was supposed to be the rule. But this was omitted from the bill following Bersatu's opposition.
Oh, because they didn't want it lah.
They didn't want it lah. And all those MPs who...
now that thing come back to haunt them lah.
Exactly.
Yeah.
Again lah, it's
So
only happens in Malaysia.
Yeah. So today, how many Bersatu MPs pledged their support to the PM right
So
now?
far 4.
So far 4. Maybe more to come.
Only time will tell.
Only time will tell.
So this is all for the salaryman and woman out there. Based on a survey carried out by the Chartered Management Institute in the UK, 4 out of 5 managers are accidental managers.
Wait, this is a UK survey.
UK survey.
So this is not a global thing.
Not a global thing.
So
a UK survey, right?
Okay.
And what do you mean by accidental managers, right? So accidental managers are those who take on management responsibilities without adequate training or qualifications.
So those natural progression, I'm in the company for 10 years already, and then there's a vacant managerial post there, then I get promoted to become the manager. But maybe I'm not adequate enough.
Have not gone through like all these leadership trainings, right? And half of them actually admit they don't have that leadership or that management skills. Then it also makes you think, right? Like if people can sort of work in these companies or lead in these companies, then what kind of culture would they bring?
I don't think this is just a UK problem. I think anywhere you go, somehow this is a problem because people still tend to fall back to that natural progression kind of system, whereby if you work in a position long enough, then naturally you will progress to become a manager or to become a leader. But very often when that happens, the top management will assume that because you are in that position for so long, you should be able to tell what needs to be done when you're being promoted without thinking about whether you have the leadership skill, whether you have the skills to actually manage the people, because technical skills is very different from soft skills. Soft skills to communicate, soft skill to be effective in managing people that
precisely
works under you.
Precisely.
So I don't think this is a UK problem. I think anywhere you go, somehow you can see this accidental manager.
This disconnect lah. Are
Correct.
companies not investing enough in their stuff, right?
Correct.
Could that be an issue also, right? Segue a bit, like this is also about succession management, right? So if you've got people who are leaving and you're not feeling that position, it's also a cost for the business, by the way. Because you just imagine if, and of course this comes to bigger positions lah. Imagine you have a vacant CEO or CTO or CFO. It's a cost to the business, right? Because you don't have the right caliber to fill in the position, and then you have to find from internal. And internal may not have the capability or qualification to do so. Then you may lead the company astray, for example, right? This has to be also looked into properly by companies, right? And companies, if they do see this survey, if they're watching this, they do have to think about this. Hey, it could also happen to my company that I'm not promoting the right people to the company, right? I mean, the bad news is a lot of managers could be incompetent, but good news is you can also become a manager. You can also climb the corporate ladder or anywhere you work lah, right? So don't lose hope.
Yeah, so this survey serves as a reminder to everyone out there to always remember to reskill and upskill yourself so that you can always be relevant to the organization that you work at.
What do you think is the most important skill today?
I think the most important skills today, not so much on technical skills, because technical skills are slowly being replaced by technology. AI
Wow, that is
stuff
a
and
very
everything.
yeah.
So I think it's the human skills, the soft skills. It's more important. Skills that cannot be replaced by machines. Like for example, communication skill is one of them. Also
Sales,
sales,
which is also communication lah, in a way.
In a way,
under umbrella.
things that you need to convey your message to the another person. Right? This kind of skills cannot be replaced. So I think that is the most important skills that people should have.
I agree. I mean, it's a telltale sign lah. Okay, I think that's all for the week.
So that's all we have for this week's weekly roundup. If you like our content, remember to subscribe, hit the like button, and share it with your friends. And hope to see you guys again in our next episode of Weekly Roundup. See you guys. Ciao.
And don't forget to also subscribe to the coffee break
Don't
with
forget
the
to
link
do that.
below.